see me? I think we're all Gucci, right?
Yeah, I think so.
All right, cool. Oh my God, there's Metallica playing in the background. All right, yeah, cool. So, well, let's get right into it. First things first, like this is not gonna be a super long call, but I definitely want to go in. Who has really questions? Because I know Aiden, I know you had a couple questions, so let's see.
As of right now, I need to just learn about reading the charts and, like how do you know when to come into a trade and stuff like that.
Yeah, so do you remember the higher highs, lower lows, confluences we were talking about?
Oh yeah, I have that shit. Yeah, I wrote all that down.
So those
I
are
was like I
basic.
just learned what a FVG was today,
Okay,
to
yeah,
be honest.
cool. So that's part of our strategy as well. I kind of can't really just get into like straight like, okay, if you see this, you just can get in the trade and you'll be 100% good. Like that's not
Yeah.
really how that works. So, but I can get into this part, like, cause the reason I trade live with you guys in the market is so you guys can see my setups and my trades, and they constantly change and evolve. So one day I might be getting in off an inverse for value gap or an order block or liquidity sweep at a certain level, and the next day I could just be getting in off a break of structure off XYZ. But we stay within my strategy, so typically it's the same entry every single day, but it might look completely different, you know? Gio can attest to that. He's been trading a decent amount of time, and so can Dom. One setup that you enter the exact same way can look 1,000 different ways. That's why I, stress a lot on like, hey, join the live calls, everything like that. But the fair value gaps, have you learned about inverse fair value gaps?
Oh yeah, that's like the opposite.
Yeah, so exactly. So it's when a fair value gap gets closed outside of. So imagine this is a gap right here, and a candle is coming down and closes outside the bottom of the gap on a trend that would be moving in an upwards direction as higher highs, lower lows. It seeks all the way through, inverses it, and that typically means it's going to want to sell off and break structure. That's normally the indicator you get right before the full break of structure. That's something we trade off. So we trade off liquidity sweep in a key level, uh, order block if we can find one, and then we enter off a break of structure and inverse for value gap. We target 4 hour key levels, new day opening gaps, new week opening gaps, equilibrium, and yeah, lower lows. So we target super high levels of liquidity. So you have only been in, what is your third day in?
Or yeah, third day pretty much. I wasn't here yesterday. I wasn't
You,
even home.
yeah, so you weren't in yesterday pretty much, but this is your second call you've hopped on. Knowing fair value
Yep.
gaps, all that stuff, key points of liquidity, great to know. So yeah, those are just a few key things. My whole strategy is inside of Discord for you to go more in depth on. But as far as that, yeah, do you have any more specific questions? Not just like a vague one.
Oh yeah, no. I'm good. For now I'm good, but maybe at the end of the call I'll let you know.
All right, cool. Yeah, and then just feel free to speak up. Does anybody have any other questions as far as like entries, exits?
Um, I got a question. I got a question.
Yeah.
So like, first of all, I want to say congrats on that 10K trade, yeah. And like, I want to ask, what
Yeah.
made you take the trade?
So my strategy, every single day we trade the same exact strategy that I came up with. It does involve ICT concepts. It's pretty similar to other people's strategies, but I kind of twisted it, throwing in some crypto and some forex strategies as well. Spent a couple
Mm-hmm.
years back testing it and just really trying new things until something finally clicked for me. So pretty much what we do is we look for the market to be either up in the morning or down in the morning. If we're taking a long, we want the market to be down. If we're taking a short, we want the market to be up. We look for the market to retest into key levels, manipulate off market open, and then when it manipulates into those key levels, it'll have a liquidity sweep. And essentially, what that is market will kind of be trailing up and down, a little bit up maybe, and then market open will hit right here. Market will rip up into a key level that'll normally typically be like there. You'll see a massive wick off this candle, and you'll see a sell off like this, and we enter off the inverse for value gap or the breaker structure to the downside, and we target the new week opening gaps, previous lows, or any liquidity points that are stronger than the liquidity at the highs. And
Mm-hmm.
essentially, by doing that, we're playing the probability of the market. So trading is all just based on probability. The probability of it going up, the probability of it going down. We had technical
Yeah.
bias, we had daily bias, and obviously our education and just reading micro and macroeconomic trends. But it's all based on pure probability. So the probability of the market retesting into this level and selling off is higher than the market just continuing to keep going up. So
Yeah.
with my strategy, after the probability gets filled, After the liquidity area gets filled, we retest in there. We enter off the inverse for value gap or that break of structure, and that confirms my trade.
Nice. Right. Thank you.
Wow.
Dawson, what time frames are you usually entering on?
So yeah, I will enter on the 15-minute or the 5-minute only. I never enter off the 1 minute. I'm targeting 4-hour, 2-hour, or 1-hour key levels. I enter mainly on the 5-minute, if I'm being honest. It used to be the 15-minute more prominent when market structure had a lot more volume during the tariffs and the government shutdown. There was a lot more trading volume. Now I scale down to the 5-minute to get a more confirmation, and so now I'll enter off a 5-minute inverse for value gap or a 5-minute break of structure. But I mainly mark everything out in the 15-minute time frame because that has the best liquidity.
Why is it that you only target 15 and 5? Like most traders are like that I've seen. Like is 1 minute you can't really trust, a chart off of 1 minute or like whatever 2 or 3.
Think about the grand scheme of things. 1 minute is pure manipulation. 1 minute's manipulation, 5 minutes early entries, 10-minute I don't trade that. That's just weird. 15-minute is like general trends and depictions. 1-hour time frames, key level of liquidity. 2-hour key level of liquidity. 4-hour. That's real trends, like economic trends that you're going to see throughout the day. When you have a bullish 4-hour or a bearish 4-hour, that's going to continue all day. So that's another trend. Also higher levels of liquidity. First, if we go to the 1 minute right now, watch how much manipulation you're going to see. So you see how this is like going up?
You don't know. You can't really know when to buy in. I've noticed that. Yeah.
Yeah, like if you're trading the 1 minute time frame, like in all these levels right here, you're getting stomped out. In all this, you're getting stomped out. Like you're going to enter your trade in a short or a long. Let's say you're taking a long right here. You're like, okay, I'm going to long these highs. Wherever it is, you put your entry. It's going to wick back down and stomp you out before it continues up. And then this is like a general trend right here. Like, look at this. Or like price action like this. And you'd have to have such a vast long. Versus when I scale it to the 5-minute or the 15-minute, you can really depict the actual genuine trends, especially when the price action needs more confirmation. There's less volume in the market. You can see, okay, overall, we continued up the entire time. Versus, you see how there's like only 2 candles that are aiming down. Now, if I go to the 1 minute, you see that?
Yeah.
So, yeah.
Damn.
I try to weed out manipulation. I try to weed out, anything that's going to affect my trading ability and cause me to take a bad trade or get stomped out early, which I've had for years and years, and I've always traded the 1 minute. And I was like, you know what? I'm not trading the 1 minute anymore. I'm taking longer trades. I'll risk more money, but I'm going to genuinely find trends, and that's what worked for me.
Yeah, I understand. I just, I see nobody uses the 1 minute, so I just wanted to know. I want to understand why.
Everybody uses the 1 minute, actually.
Oh, for real?
Yeah, but
nobody buys in on it.
A lot of people
from
actually
what I've seen
do.
From you and a few other traders.
Yeah, a lot of people do, actually. Especially trading stuff like NASDAQ. I mean, Gio, you can attest to this. You've seen a lot of other traders as well. They will use the 1 minute. TGR uses the 1 minute a lot. But any good, profitable trader who's trading their real live money in a brokerage account is entering off the 5-minute, 10-minute, 15-minute. Sometimes I see traders do the 3-minute. I've never tried it, but I can't knock on it.
I think I'm low-key going to try that out, the 3-minute.
I mean, yeah.
Just mess around.
If you have time to do it, if you have time to backtest it, why not? I mean, I tried a lot of things. 3-minute was not something I tried, though. I saw no point to trying it. Does anybody else have any questions?
I got a question.
Yeah, what up, Kylie?
So in the day, like on the live account, is there a max we're allowed to make in the day?
No. There's just a minimum. You have to make a minimum of 500.
Perfect. And
Yeah.
then like you said before, the payouts go on the 15th?
Yeah, the 15th. We're just waiting for PCI compliance, and we'll be up and running.
Okay, perfect. And then after that, is it a weekly?
Yeah,
thing,
so it's
or
every
just...
5 to 7 days.
Okay, perfect. Thank you.
Yeah, of course.
I've got a question.
Yeah.
What indicators do you use?
So I coded my own using the Pine script. I can send you access to that. It's invite only. I'll send you access to that as well. Normal indicators, really all indicators do is point out things in the market that, coding can detect AI, artificial intelligence. Really, the only thing I'd use them for is finding key levels. I use more of these type of things. I guess you can call them indicators as well. Oh, sorry. Like my Fibonacci and stuff like that. Like this is what I'll use for my key levels. I'm not really a big thing on indicators. Don't go down that rabbit hole of trying to find the indicator that's going to make you rich. It's not true. Nothing's going to happen. All these people selling their indicators, it's fake.
Yeah, no, because I did watch a video, but I remember you telling someone like yesterday, I think, on call about your indicator. That's what I wanted to ask.
All my indicator does is mark key levels of liquidity, which I could do myself in about 5-10 minutes, but it saves me time and it's more accurate.
So like when I start trading, would you give me access to it?
Everybody in the elite program has access to it, yes.
Alright, cool, thank you.
Of course, yeah. Trenton, what's up, bro?
What's up?
You have any questions?
I just joined in.
Yeah.
I just joined in.
Yeah.
I mean, all my questions that I know of what to ask, I asked yesterday. So I'm just waiting for people to like talk about it so I can ask questions about it.
Yeah, I mean, we're almost I don't know. I don't really think anybody has any more questions. I kind of just answered majority of them.
Do you want to talk a little bit about liquidity?
Yeah, I want to talk a little bit about you guys want my strategy or liquidity? Which one do you guys want?
I wanted both, but whichever one's faster and easier first, and then
I could probably explain both of them at the same time. All right, look, all liquidity is buyers and sellers in the market. They're orders. Volume is how many traders there are, and liquidity is the amount of orders being executed by that volume of traders. Okay, let's see here. All right.
So where your mouse is right now, where that kind of like fair value gap is right there, where you were just at, is that kind of like all liquidity right there?
This is a
that
trade
hasn't
we
been
took.
swept into?
This is a trade I made $10,000 off.
Oh, damn.
Oh, wait, no, this is the $4,000 trade. I think the $10,000 trade's back here. Yeah, it's back here. Yeah.
Okay, but how do you like, can you see the liquidity in the market? Is it just like spots that aren't filled by the market structure?
Yeah, so liquidity lies above highs and below lows. So think of anywhere the market hasn't been, there's going to be liquidity. If the market goes to that level, the orders are filled. So think of, you know what a limit order is, correct? An order at a specific price.
Yeah.
So if the market hasn't gone to that price yet, there's going to be a lot of liquidity. Since the market's been trailing around here a lot, there's no liquidity there. Above here, the market hasn't gone there in a while, right? Since all the way back here to 25,995. So it hasn't been there in a while, so there's going to be a lot of liquidity. There's going to be a lot of liquidity above here because market hasn't been there in a while. There's going to be a lot of liquidity under here because market hasn't been there in a while. Liquidity under here. Market hasn't been there in a while. Anywhere market hasn't been in a while, there's going to be a lot of liquidity. And it's exceptionally strong liquidity above highs and below lows. Inside fair value gaps, there's another thing. That's a different set of liquidity. The set of liquidity inside the fair value gaps is what you get with momentum candles. Essentially what a momentum candle is so many buy or sell orders at that level, at that price, it causes a jump up in the market, causing a gap where liquidity is going to want to go back into that level and fill those orders that are still there. That make sense?
Okay. Yeah.
All right, so I'm about to give you guys like a dummy run of my strategy. Make a chart right here. All right, cool. So let's say we're looking at something like this, right? Market open. We'll say market opens right here. You guys following along?
Yeah.
All right, market's open right here. Let's imagine these are just candlesticks, whatever. What I'm looking at now is, okay, first thing is first, liquidity here. Second thing, liquidity here. Liquidity here. Liquidity here. Liquidity here. Liquidity here. Now, for research purposes, let's imagine that on this last liquidity line, or this one right here, there's a 4-hour FEG. So let me get the text box. So imagine there's a 4-hour fair value gap right here. Okay. What I want to see in market open is we're already above this level. This is amazing. This would be an amazing setup. We're already above this key level of liquidity right here. What I want to see now is a wick up on market open, manipulate, and I want to see a sell-off. Now let's imagine there's an inverse fair value or a fair value gap right here on the 5-minute time frame. 5-minute FVG right here. I'm looking at this. Okay, I marked it out here. All right, cool. Liquidity sweep at this level. If we inverse this gap on the 5-minute time frame, I'm going to enter my trade. As we come down and inverse the gap on the 5-minute, if we haven't got a break of structure, I will wait for this candle to close. If we do have a break of structure, I will enter immediately. So I'm entering on the bottom of this gap right here.
Oh. Hey, Dawson, what do you mean by your break of structure?
Break of structure meaning the starting of a new trend. I don't know why this isn't working. All right, well that's glitching for some reason. I don't know why it's glitching. Anyway, I'm entering here, and I'm going to target this 4-hour FVG right here. This is my high time frame key level of liquidity. So we already tapped into my high time frame key level liquidity here. Anything above that high, we swept liquidity here. Amazing. We swept liquidity. Now we're pushing down. We have a 5-minute inversion. I'm expecting right here, after we fill this inversion, especially once we get down to these levels right here, we're going to want to sell off. Boom. Sell off. Might see a slight retest and then sell off. Sell off. Once we get into this level right here, my take profit is going to be barely inside this level, about 15% inside this level. So if your 4-hour fair value gap is 100 points or whatever, 100 points wide, you're going to be 15 points inside the FVG. Once you're in there, you're probably going to hit your take profit. Boom. You're most likely going to see the market trail back up, possibly all the way back up to that order block before it continues down, or it'll continue up for the day. So we're entering off a liquidity sweep at the highs inside a key level, and then we're entering off the inversion of the 5-minute fair value gap or a break of structure. You preferably want both, and then you're targeting a 4-hour fair value gap, a new day or new week opening gap, which this 4-hour could be either. And you are targeting those key levels of liquidity, and you want a 1 to 3 RR. So as far as your stop loss, and once you're entering on the 5-minute FEG right here, if you're entering off a 5-minute FEG, you want your stops right above it, about 5 to 10 points above it, depending on what symbol you're trading. Now, if you're entering off the break of structure, like if you entered here, you want your stops above the fair value gap again, if it's above. If this break of structure was here, you'd want your stops above the previous high. And those are all key levels of liquidity. And that's all based on probability. That makes sense? Or are you guys fucking super confused? And
Yeah. No,
That makes so much sense.
Really?
So I just got a question.
Yeah.
What do you mean by points? Like, I don't know. Is that like the percent?
So yeah, you see how it's $25,947 per share?
Yeah.
If it drops to $25,946, that's 1 point.
Yeah. So like for the percent of the stock, how much it drops or whatever?
Not percentage. You have percentage points and you have points. If I say percentage points, that means how much it's up percentage-wise. If I say points, that's just how much the stock is up and down dollar value-wise. So if we're at $100, we go up to $112. We're up 12 points. If we go up 2% on the stock, we're up 2 percentage points. So I'll always make sure to say it correctly.
All right.
I got a question. Just give me 1 sec.
Yeah?
Dude, this strategy low-key looks fire as hell.
It is fire.
Super simple.
It's super simple and it works every fucking day.
Okay, well, be honest with me. Did have you like tried ICC strategy before?
I don't know what that is.
Like that strategy? Oh, this is a strategy called like indication, correction, continuation. Have you heard of that?
No,
Wait, what
but
did you
there's
call it?
about 7,000 strategies out there. Here's my strategy playing out right here on a market open.
What did you say the strategy is called?
It's called indication, correction, continuation. ICC, not ICT. 2 C's, not ICT.
Garrett Marshall talked about that. It's all accumulation, distribution, and then ICT concepts.
Yes,
as well.
that right there.
Yeah.
Yeah, that right there.
So we have there's majority of the strategies are all pretty same concepts, just some asshole tweaked them a little bit and they call them a brand new strategy with a crazy new name. Here's my strategy playing out perfectly. Right before market open, we manipulated up. Market open came, manipulated up, and then we completely sold off down here. It's been an amazing trade to take. You see how we push above that previous high and fill that liquidity zone. There's also key level liquidity in here, this fair value gap, also above the previous high. Fill that liquidity on the 5 minute. I bet when we came down here, we also inversed the 5 minute gap. Yep, we inversed a gap right here. This is a 5 minute gap that got inversed. So we would have taken our trade here. We would hit full take profit on that one. There's one part of my strategy working out. Let's go find another one. We took this trade right here. Was this market open? Yeah. This one pushed way above the highs in the morning. We're already above highs, above that liquidity level. We sweep up. We have a 5 minute inversion right here. We took this trade right here, as you can see. 5 minute inversion right here. We're already above highs inside those key levels. We sweep liquidity, previous liquidity as well. And then we make our push down right here under this 5 minute inversion. This one wouldn't have been the worst trade ever, or the best trade ever, but we still would have hit full take profit. We also inversed another 5 minute gap on the way down before we ended up turning around, because I bet we were in a higher time frame gap. So the strategy works 100%. So you guys don't have to worry about that. It's just you actually sticking to the rules. One trade a day, market open, manipulation, liquidity sweep off a key level, fair value gap, inverse fair value gap, breakage structure, target previous level lows, also with a key level of liquidity, 4 hour, 2 hour, 1 hour time frame. And I guarantee you'll make $10,000 a month with that strategy.
So your strategy works for when market opens.
Yeah, it also works throughout the entire day. It typically works the best on market open. Because that's when the most volume is in the market.
And that's for crypto too, for when market open?
Market doesn't open on crypto, but yes, the strategy does work for crypto as well.
Wait, so my question is, how do you figure out how much to risk on a trade?
I risk the same amount every single day. It depends. So you have an A class setup, a B class setup, and a C class setup. For you guys, only take A plus class setups. So I'll get an A minus setup and A class. The more profitable trades I hit in a row, I normally up my contract. So if I'm up, let's say I win 6 trades in a row, I'm going to double my contract size because I can afford to do so, So especially if I see a good setup. But it's not like don't change what you're doing. Stick to one thing. If you're going to risk 1,000, make 3,000, risk 1,000, make 3,000. If you win fucking 6 trades in a row, risk 2,000 to win, whatever it is, 8,000.
Right.
So pick something. I would recommend risk 1,000 to make 3,000 every single day. That's typically what I do. Now it also depends though. Sometimes I might risk 3,000 on a trade or 2,000. So that does happen. Really, the only reason I would ever do that is if the key level liquidity was a little bit higher than my stop and I was really confident in the trade, which typically doesn't happen. Or 2, I'm up big as fuck on the week and I'm just like, all right, fuck it. Like that 10K trade, I was already up 8K and I was like, all right, fuck it, I'm gonna risk $4,000, and we made 10K.
Nice.
But always make sure you're hitting a 1 to 3 RR. So if for every dollar you risk, you need to make 3 back on the trade if it wins, and that keeps you profitable.
Dawson, are we gonna start doing like crypto trading calls?
Yeah,
throughout the week?
Every single night. Just the volume right now in the market is not worth your guys' time, nor mine.
Yeah, no, we're gonna sit there for like 4 hours and it's gonna move
100 points on Bitcoin.
Yeah.
Yeah, so I don't want to go through that honestly. But yeah, is everybody pretty good now? Everybody, no more questions?
I think I'm good.
Yeah, I'm all good.
All right, cool. And then say something to YouTube because I'm posting this on YouTube. Wait, what's your question first?
Well, no. Well, since I'm new, I have a 5K demo on peak profit. Do you think I should spend more money and try to get a higher one? Like, what do you think I should do, Dawson?
I think 50K and 100K are the best accounts by far.
All right.
I was just about to say that. My recommendation is always 50K.
That's what I heard. I just wanted to hear what you would say, as somebody new, Like, I didn't want to risk a bunch of money, but, like, the 5K for me is good, like, trading Sol. But, like, I can't do anything on Bitcoin, you know what I mean?
Yeah, I mean, you can still trade Bitcoin on the 5K 100%. since it is perpetual futures on the firm, so you can put in, as low as $10. But yeah, as far as passing, getting a payout on a 5K, I'm not going to sit here and work with you for an entire month for you to, at the end of the month, maybe make $800. Like, on a 50K, we're going to max pay out that shit. So, we'll do that. But yeah, so, is everybody pretty good? We're fucking going to rip Monday. Dom, let's try to get you your first, 6 to 10K this month. We're only 10 days in. You're up 4K, so this should be fine. Gio, let's freaking print, and then everybody else. Quinn, you're about to pass your funded, you did pass your funded, so let's get you paying out, and then we'll do all good. And then does anybody have any questions before I dip?
All good.
All right, W. Go.
I was gonna talk to you after the call, privately.
Yeah, Max. We can stay on the call right after. Say something to the YouTube before you guys go.
Due to Dawson's mentorship, I became a profitable trader in 1 month of doing this with no experience. It is so worth it. Holy crap, you guys need to do this.
That's fun. It's funny because that is true. You actually did, but no, we don't have to plug it that.
Bro, in 1 month.
All right, Dom. I'm getting a fucking testimony. Your story's crazy. All right.
We doing it, boys. I'm gonna holla at you guys. Thank you for the call. I gotta head into work now. You guys have an amazing day.
Ew.
All right, W boys. Don't say that word in my chat though.
Yeah.
All right.
I
See ya,
got you,
boys.
bro.
Sonny's